So our entire GDP just collapses. There's no way we can make it without a complete collapse. Even up till the summer of 2008, we were right around the corner from, this global financial crisis. And we were in the middle of what became known as the Great Recession, the worst recession since the Depression. But even up till the summer of '08, people were denying that a recession was anywhere in sight, let alone that we were in one. And why it reminds me now, 2007, is because a lot of the forecasts that I have been making since pretty much the beginning of QE and 0% interest rates was that eventually rates would move up and it would be a huge problem for everybody who would loan money. The banks, and then the US government, of course, would be in a lot of trouble because it borrowed so much money and now had to deal with rising rates. So a lot of the predictions that I've been making are coming true, yet once again, the mainstream is oblivious to these risks, just like they were oblivious in '07. And I also think it's significant because in the fourth quarter of 2007, that's when the Great Recession began. But during the fourth quarter of 2007, we were reporting rosy economic numbers, just like we are reporting now. It wasn't until the fourth quarter of 2008, a year later, that they went back and they revised down an entire year's worth of economic data. And all of a sudden, those rosy statistics became the Great Recession. And I have a feeling that a year from now, we're going to find out that the economy wasn't nearly as good, in particular the labor markets, as we were being told. The numbers are not capturing how bad things are. We lost 35,000 manufacturing jobs. Those are the jobs we want. Those are the ones that we lost. Those are productive, higher paying jobs. But also the unemployment rate went up. The labor force participation rate went down. And in fact, if you look at the household survey, I think 400,000 people lost their jobs. And the 99,000 jobs that were created by the private sector, that was well below estimates, they were all part-time jobs. And they went to people who already had a job, or two, or three. The number of Americans holding down multiple jobs just hit another all-time record high. People don't want 2 or 3 jobs. They want one job. But the problem is one job won't cut it anymore because food is so expensive. Rent is so high. Insurance, medical care, taxes, everything is going up except people's paychecks. I mean, maybe they're going up a little bit, but they're not going up enough. And that's why they now need 2 or 3 paychecks to do the job of one. They have this Keynesian belief that inflation is a byproduct of economic growth, that a strong economy creates inflation. And that's not true. Actually, a strong economy helps counteract the inflation that the government creates. The government, the Federal Reserve, and deficit spending is the source of the inflation. Now, sometimes the inflation can be masked by a strong economy, which is productive and turning out more goods and services for that money to buy. But like the jobs numbers that we just got are highly inflationary. The markets don't get that because we lost productive jobs. We gained non-productive jobs paid for by the government, which means bigger deficits. As the economy falls into an official recession, the deficits that are already horrific, that are over $2 trillion a year, are going to probably double to $4 trillion or more. And that is inflationary because the Fed is going to be printing money to monetize all that debt. The weaker economy is actually going to send inflation higher. And in fact, the main reason that inflation came down as measured by the CPI from 9% to about 3%, and now it's already trending back up, it wasn't because of the rate hikes. It was because the rate hikes caused the dollar to go up. And it was the strong dollar that brought down oil prices, other commodity prices, and helped bring the CPI down. But I think the dollar has topped, and I think it's about to surrender all of those gains. And I think the dollar is about to drop. And so if the dollar has put in a top, that means inflation has put in a bottom. And that's going to be a very difficult predicament for the Fed because just as the economy is weakening, inflation is going to be strengthening. What do? Well, we're going to have a sovereign debt crisis, a currency crisis. The Fed has to pick which one. Ultimately, we'll probably end up having both. But initially, they're going to have to choose between causing a financial crisis that's worse than '08 with no bailouts, right? So that means real serious losses. It's not just that a bank fails. And all the big banks that we bailed out in 2008 will fail. And they're much bigger now, and it'll be a much more disastrous collapse. But it means that depositors at these institutions will lose money, because there is no money in the FDIC to make these insolvent banks whole for the depositors. So the Fed is either going to have to allow a massive financial collapse, or in order to prevent that, it's going to sacrifice the dollar, and it's going to surrender in its inflation war, and it's going to allow much, much higher inflation. They're going to have to stop pretending that the goal is 2%. I mean, we're going to be much, much higher. We'll be in the double digits. Whether it's ever going to officially wave that flag or the markets are going to have to figure it out just based on what the Fed is doing rather than what it's saying. And when the gold price really starts to get closer to 3,000 and 2,000, which you can do very quickly, that's really a warning sign to the world that, we're out of room here, that there is a crisis of confidence in the Fed, in the dollar, in the Treasury market. And we start to see the long end of the curve really starting to get hit. That's when it's going to hit the fan, because now the economy is going to start reacting to this big backup in rates. The commodity prices are going to start reacting. Oil prices are going to react to the weak dollar. All that's going to obviously start showing up in CPI. So you're going to start to see these inflation numbers moving up as the economy is weakening. We're going to start to see a big uptick in unemployment, and the Fed is going to have to choose. And I think publicly, especially it's an election year, if unemployment is rising and the economy is weakening, the Fed is going to go for stimulus. Well, stimulus is inflation. That's all stimulus ever was. That's the only arrow in their quiver is inflation. That's what quantitative easing is. It's inflation. It's a euphemism for inflation. And they're going to go back to that. They're going to abandon quantitative tightening. They're going to go back to quantitative easing, even as inflation is well north of 2% and rising. And then the markets will figure this out. And then, the currency will collapse and inflation is really going to break out. And then the Fed is going to have to decide, is it going to do anything to rein that in or just allow, hyperinflation? We use our dollars to pay for all the goods that we don't produce. And so the world needs to want our dollars. And not just our dollars, they have to want our debt. They have to want our treasuries. Because when all these countries that are running trade surpluses with the United States, they earn all these dollars, what do they do with them? They buy treasuries. So they have to want to own our debt. They have to want those treasuries. They have to want those dollars. But they only want dollars if they're confident in the future purchasing power of those dollars. They have to believe that the Fed is serious about maintaining the purchasing power of the dollar and keeping inflation low. But once our creditors recognize that inflation is out of control and that the Fed is no longer trying to rein it in, it's more concerned about propping up the economy, propping up the government so it can keep on spending, then our trading partners are not going to want those dollars anymore. And we have a real problem because now the value, the exchange rate, is going to collapse. And then we can't afford to import all of those goods that we were previously importing. Well, how is our economy going to function without those goods? Because we don't have a domestic source of those goods. And we've built this entire service sector economy on the foundation of imports. Because if you don't have the products, then most of the services don't have much value either. You take away the products and everything that's been built on top just implodes. So our entire GDP just collapses. Meanwhile, we owe the world a fortune. We're the world's biggest debtor nation. We have more debt than all the other nations combined as far as what we owe. And how are we going to service that debt? It becomes more and more expensive, a bigger drain on the economy. I mean, look at just the interest on the national debt. Interest on the debt is going to be a larger expense than defense.
Yeah.
About $1 trillion. But it could be more than Medicare or Social Security. Over the next 3 years, half the debt matures. So that's 34 trillion. Half of that is 17 trillion. We have to go out and borrow that 17 trillion to repay the maturing bondholders because they may not want to roll those bonds over. We've got to borrow that money. Over the next 3 years, I'm sure at a minimum, we're going to add another 10 trillion to the national debt, at a minimum, probably more. So that means we have to borrow $27 trillion. At what rate of interest? What is that going to cost? Because even if we have to pay 5% interest on that money, that alone, just that 27 trillion is close to 2 trillion in annual interest, annual. And that doesn't even count the interest that we're paying on the other debt. So if we're paying $2 trillion a year in interest on the debt, that's about 50% or 45% of our current tax revenue. But in a recession, our tax revenue is going to go down. So maybe interest on the debt will be more than half our tax revenue. And if this continues for a couple more years, interest on the debt will consume 100% of our tax revenue. Everything the government wants to spend money on, 100% will have to be borrowed, which is impossible. There's no way we can make it without a complete collapse, which is why it's going to happen. It's been a self-fulfilling prophecy. The dollar's been strong because of the perception that it's strong. So whenever there's a problem in the world, people just reflexively buy the dollar. And that's helped us. I mean, in the long run, it's going to come back to bite us, but it's enabled us to continue to go deeper into debt and keep this whole thing going and kick the can down the road. But perceptions can change very quickly. And people that want dollars can all of a sudden not want them anymore. And that's going to be a big problem. And it's not just the interest on the debt, which people are focusing on. It's the principal, because the maturities are short. And that means when the bonds mature, we have to pay back the principal. And if people don't want to lend the money again, they just want their money back because they want to do something else with it. Now the Fed is under tremendous pressure to buy, because if the Fed doesn't buy, then rates have to soar in order to convince somebody who doesn't want treasuries to hold them. So if they don't want to hold them for 5%, well, maybe 10%, maybe 15%. What's the point? But the problem is, if we have to pay 10%, we can't afford it. The numbers don't work. So the best alternative is gold. I mean, gold is the alternative to the dollar. Before the dollar came on the scene, gold was the reserve behind every currency, including the dollar. Every currency was backed by gold. The dollar was actually legally defined as a weight of gold. That's what a dollar was. It was a quantity of gold or silver, because in America, the Constitution put us on a bimetallic standard. A dollar could be a weight of gold or it was a weight of silver, but that's what it was. When Bretton Woods came around, all of the countries agreed that instead of holding gold directly, they would just hold dollars. And we had all the gold because the dollar was redeemable in gold. And so that standard, that dollar standard, was a gold standard. And when they said the dollar was as good as gold, it was because we promised to pay gold to anybody who had dollars. Now, we defaulted on that promise in 1971. And so then we told the world, you're holding dollars, but you're no longer holding gold. You just got the dollar. And the world accepted that. And we've been on that system, for over 50 years, where currencies are backed by dollars and dollars are backed by nothing. Now, I think that what's going to happen is as countries start rejecting the dollar, they're just going to go back to gold. People think that the dollar can't lose its place because there's no other currency to take its place. And I would agree that the euro shouldn't be the reserve currency. The yen, the Chinese RMB, the pound, none of these currencies should be the reserve currency, but then neither should the dollar. So there are no fiat currencies that should be anybody's reserve. Every fiat currency should be backed by real money. And the best real money on the planet is gold. And that's where the world is heading. Now, politicians don't want this, but this is where we're going. The people need this. The people need real money. And at the end of a currency crisis, if you want to restore order, if you want to restore confidence, how are you going to do it? You're going to have to go back to gold. And why do you think all these central banks are buying gold? It's not an accident.
It's not a trend we can ignore, absolutely.
And because they need real assets on their balance sheets. They just can't have somebody else's liability. They have to have real money behind their currency. A lot of people will say, well, but there's not enough gold to make the monetary system work. Not at $2,000 an ounce, but it may work fine at $20,000 or $30,000. It's just a question of where do you replace gold in order to make the monetary system work. Now, it worked in the past when gold was $35 an ounce, but that's because we hadn't printed all this money, right? So prices were a lot lower. Money supplies were a lot lower. But in today's world, if you want to bring back monetary order and return to a sound monetary system anchored in gold, you can do it, just not at $2,000 gold. It's going to be a much, much higher gold price, which is why I recommend that people buy their gold now before it gets repriced 10 times, 20 times higher than at the current price. So if people start to look for something more reliable than the dollar, when the dollar is losing purchasing power slowly, maybe it's losing 2, 3, 4, 5% a year, all right, you can deal with it. When it starts to lose 5% a month, it becomes very problematic. And so people will start looking for alternatives. Governments will start looking for alternatives. Obviously, a confidence game. Enough people have to lose confidence in the dollar, and then the game is over. Because what gives the dollar value? It's just that confidence, right? Because there's nothing real there. There's nothing tangible there. And so what is the critical mass that it takes to precipitate a run? I don't know. I know it's there, right? It's like the question, how many straws will break the camel's back? Well, you don't know until you put the last straw on there, right? And it buckles. So given where the numbers are, I think we're going to find out pretty soon. The thing is, you want to find out prepared. You want to find out when the dollar breaks, when you've already sold yours. You've got to accumulate other assets. You don't want to find out after the fact, because then you're broke and it's too late to do anything about it. The reason we were able to help the Allies win the Second World War was because of our industrial might. We were the arsenal of democracy. We had all the factories in America. We built everything here. And so in order to win a war, you needed, tanks, and you needed planes, you needed ships, and we built all that stuff. And that's what enabled us to prevail in that war. America today doesn't have all that industry. We actually have to borrow money to finance our military. We're not going to be able to do that. So at one point in time, the Soviet Union was a giant military power, right? We had the Cold War, we had the US, and we had the Soviet bloc. And they collapsed because they were broke and they could no longer afford the military anymore. And so they collapse. I mean, I think America is in a similar position where we can't afford our military. We're paying for it with borrowed money. We pay the soldiers in borrowed money. If the dollar collapses, I mean, the soldiers aren't going to work. I mean, they're going to have to go home and get some other job. If the U.S. government only has dollars to pay, how do we provision everybody? How do we supply everybody? If the dollar crashes, it just takes down our military might with it. Plus, it's not like if countries start abandoning the dollar, we're just going to like invade them and say, well, you better take these dollars or, we're going to nuke you. I mean, I don't know what good our military is in a situation where people around the world just don't want to buy our bonds anymore. I mean, how do we declare war on somebody because they don't want to loan us money? If they're doing this in an environment where people are trying to get rid of the dollar and big deficits and inflation are a big factor that's motivating the desire to get out of the dollar, if we have a war, that just means bigger deficits. That just means more money printing, more inflation. And we now made the dollar even less desirable because we're at war than it was when we were at peace. So it's going to backfire if they try that. When the dollar was regarded as the safe haven and everybody wanted it, yeah, that worked, right? Go to war and create demand for dollars. It's also interesting if you look at the fact that the world is at war right now. I mean, the U.S. is not involved directly, but there's war in the Ukraine, there's now war in the Middle East. The dollar is not really going up. And even all these rate hikes by the Fed haven't lifted the dollar. They lifted it off the lows, but it's been pretty steady here for about the last year. And I think, as I said earlier, it's getting ready to crack. And once the dollar starts to fall, it's got a long way to drop. Nothing that is likely to happen will change it, but clearly a lot has already happened that has delayed it. So am I going to say that it's impossible to continue to delay the day of reckoning and kick the can down the road? No, it's not impossible because we've already been doing it for a long time. But the longer we do it, the harder it is to do, because that can we're kicking is getting heavier and heavier and heavier. If you look at the numbers, look at the debt, look at the predicament that we're in. And we get to a point where you can't do it anymore. And I do think we are very, very close to that point. Could I be shocked that, we've pulled some kind of crazy rabbit out of a hat some here and maybe we can push this off for another 3 or 4 years or 5 years? Maybe. But if we succeed in doing that, we just make it even worse. Not that it's not going to be horrific if it happens now, but it's going to be even worse if it happens later. The sooner, the better. As far as, it's like if you're in a hole, I mean, you got to stop digging the hole. We have to get out of it eventually. But the longer we keep digging it, the harder it is to get out of it because we're in an even deeper hole. I mean, we're already in the Grand Canyon of holes. So it's like, digging this thing any deeper, it's just going to end up being a grave because there's going to be no way to get out of it. I don't know how long the road is. I just know that eventually you run out of it. And I know where you're going to end up when you run out of road. I don't want to be there financially. I mean, I may be stuck there, physically, but I know how the game ends. It's not going to end well for the dollar. It's not going to end well for dollar-based investments. And so I'm just going to position myself that way. Now, as far as how does it end for Americans, it's a tough call because could this crisis be a catalyst to making the types of reforms that we've been delaying making for a couple of generations here, as far as reigning in government and going back to the principles that built the republic of limited government and sound money? I mean, is this going to be a catalyst to go back to embrace those values, which can ultimately be very good for America in the long run? But is it going to be a catalyst for America to abandon what's left of capitalism and just fully embrace socialism? And in which case it's going to, be an unmitigated disaster. But I don't know that history has been written yet. It is very dangerous when you look at the political winds and how they blow, and you look at how dumbed down the American electorate has become over the generations of government schools. We have a very ignorant population. Not everybody, but the masses. Yeah. And when everybody gets a vote, the idiots get to outvote the people that have an understanding. It's very hard to outvote the idiots when they outnumber you. So that's the inherent flaw in democracy. We've raised now a population of people who feel entitled to stuff, that they don't have to work and that they can just get stuff for free. They can just get stuff from the government. And they don't realize the government doesn't have anything. All the government has is what it takes. And so you have a nation of people who want the government to steal from other people and give it to them. And so once that mentality really permeates the majority of the population, you're really doomed. That's a scary position to be in. And if you look at the stock market, I mean, the U.S. stock market is at record levels as far as valuation, even though interest rates have risen, even though corporate earnings are now in jeopardy, not just because corporations have a lot of debt they now have to service, but their revenue is going to be going down. And governments, it's not just the federal government, it's all these state governments, municipalities, everybody was borrowing money. And now the bills are coming due, the rates are going up, everybody's getting squeezed. There's tremendous amounts of risks. At some point, they're going to blow up. I think this time it's going to be an even bigger round of inflation than we had. And people forget, one of the ways that we kind of survived the 70s was married women didn't work in the 40s, the 50s, or 60s. I mean, their husbands supported them. Their husbands' wages lost so much value during the 70s that all these married women had to start working. But today, you don't have, a spare worker like sitting home. They're all working. In fact, now people have 2 and 3 jobs apiece. What are we going to do? Are we going to pull kids out of school and send them to work? Because how are families going to survive now? This decline in the value of the dollar, which I think is going to be worse, a bigger drop than what we had in the 1970s.